optimistically, if you believe the lockdown is going to start easing at the end of this month, which is pretty quick, even in that case, with what's happened through February, Q1 GDP growth on our estimates is going to be around 3.8%, so down 2.2 percentage points. And so what is certain is what's going to happen to China in terms of, the demand shock from the fear factor, the supply disruptions. The downturn in growth in China is going to have big spillover effects on the rest of the world. China's just too big, too interconnected.
Yeah. So what's going on with markets? Because they don't seem overly concerned. Sure, we've had an impact here in Asia, but considering things, I mean, today looking pretty calm, and the U.S. is at record levels.
So I think the markets are looking at the second factor, which is the risk of the direct effects. So instead of indirect spillovers, it's what if the virus actually starts to really accelerate with infections in other countries. And so other countries become like China, and they have the fear factor running high, supply disruptions. I don't think that's really happened yet. Maybe a little bit here in Singapore and Hong Kong, but generally, I think what the markets are taking a bit of optimism around is the rate of increase in daily infections look like it's not accelerating. In fact, it could be easing off a bit. But I think what they're missing is the damage to China is going to have big spillover effects. And the other thing is we don't know for sure what's going to happen to COVID-19. The risk is there could be a second wave. There was a second wave around SARS. So overall, we're still cautious.
No, but the markets, if you take the markets to be an aggregation of opinions, right, then it seems like a lot of people, even though what you're saying is essentially striking a note of caution, a lot of people among market participants believe that this is something that the markets can override on. And given that it's a liquidity-driven rally, they're looking at every opportunity, every dip to get in.
I think so. And I think the markets are looking at the playbook of SARS. And what we found there was it was a big hit to growth in the countries that were most affected, but it was a V-shaped recovery. So they're saying, oh, yes, it's going to have an effect on growth, but it'll be short-term and there'll be a rebound because of all the pent-up demand and production. What we think markets might be missing is the depth of the V could be worse than people think. So the economic data we start getting for February could be a lot worse than people think.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.